Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So as the markets come down quite a bit in the last few weeks, we starting to see opportunities to invest in. So some of the best companies out there are coming back to their fair values or even undervalues. So what I would like to share with you guys today is 5 different companies that are right now seem undervalued. And of course, I'll give you the basic information as always. And of course, if you're interested, please do your own research and don't just take this as a financial advice. And like I said, there's a lot of these companies have been reporting their earnings. Some of them will be reporting next week. So these are basically all the companies that I start reporting this week. So on Monday, there's not that many companies that we're interested in that are reporting. And then we got maybe NXP. Tuesday, we got Lilly's. We're basically Eli Lilly, so basically will be really Eli Lilly, whatever it's called. It will be interesting to see what they say. 3M, maybe finally they're going to cut the dividends. The McDonald's is reporting, Coca-Cola is reporting, as well as in the afternoon Tuesday we have AMD and Amazon, as well as micro supercomputers, which is very interesting. So it'll be interesting to see what SMCI says, as well as AMD and Amazon moving forward. Especially this one has gone up so much with AMD as well, so it will be interesting to see what they say. Pinterest is also reporting on that same day. Then we got Pfizer, CVS, and so on. But MasterCard is the one I would be interested to see what they have to say. We've seen what Visa's done, so I'm assuming it will do more or less the same. Then we have Qualcomm on Wednesday after the markets close. We got Fastly, for example, Etsy, and a couple of other companies reporting. And Thursday, we have Canadian Natural Resources. Again, I know some of the community members own this, so it'll be interesting to see. Zoetis is another company that's reporting on that day, as well as, of course, Apple. So the big boys are basically, I think it's the last one to report out of the big boys here. Coinbase is reporting, a couple of other companies. And then on Friday, Hershey is basically reporting. So that's that. I'll be keeping an eye on that to see. Hershey is one of the companies that have been buying quite a lot lately, so I want to see what they have to say, especially with the cocoa prices and everything else going up lately. So it'll be interesting to see if that has a major impact on the company or if they're still managing it and so on. So there are a lot of opportunities out there, so we just need to keep an eye on things. And now what I'm going to do is I'm going to share with you 5 companies, kind of give you brief information about each one of the companies. And like I always say to you guys, if you're really interested in any of these companies, please do your own research, inshallah, moving forward. So we've got the same kind of heading, so I'm not going to bore you with reading out that loud. So the first company we're going to look at today, Relx. This is one of the companies that are basically is a UK-based companies. They do data analytics, 77.8 billion market cap. That's in US dollars. Moat basically has a wide economic moat, currently priced at $41 per share. Dividend yield of 1.8, payout ratio only 57. I say only 57, that's still high. And the latest increase was 8%. The 5-year growth rate, latest increase was 8%, and the 5-year growth rate is 7%. Dividend streak of 13 years. And annual payout right now is basically $0.74, which is actually not bad at all because the stock is actually trading quite low. Safety 67%, 5-year growth, 5-year revenue and compounded annual growth rate of only 4%. You would think it would be a little bit more than that, but it's 4%. Yeah, it's kind of okay. 5-year in terms of EPS is about 3%. Again, that's not great. There's no huge if you think about it. But I'm hoping that maybe in the next few years it will be different, and we will check that in a second. Profit margin about 19%, return on equity for almost a 50%, return on invested capital about 25%. They have a free cash flow right now of almost $2 billion, and total return the last 10 years we're looking at about 12%. Growth estimate next year Yahoo Finance does not have that information for UK based companies, but for the next 5 years is about 7%, and then 10% discount right now, $47 per share is where they think the price should be. So nothing huge, nothing to worry about when it comes to this company. It's a like I said, it's UK based company, so if you're interested in do a little bit more research, you might want to go and use maybe Simply Wall Street. Will have a lot more information. The next one that we're looking at today is Autodesk. This company provides 3D design software, entertainment kind of software, basically to all sorts of industries, Right now it has a 46.6 billion market cap. They have a wide economic moat. Price right now $217 per share. They don't pay any dividends yet, so in terms of their 5-year revenue growth, compounded annual growth rate about 18%, and then basically a 36% in terms of EPS, which is really good. Profit margin about 16%, return on equity about 60%, return on invested capital we're looking at about 25%, and free cash flow we're looking at right now about $1.7 billion, which is quite nice to see. On total return in the last 10 years about 17%, which is really nice. This helps us, to be honest with you guys, to kind of see where the company has been in the last few years, but of course it does not tell us what's going to happen in the future. So this kind of gives us an idea based on the estimation from these analysts. So 13 years, 13% this year, and then after that 12% every single year per annum. 21% discounted right now, $275 per share is where they think the price should be. Really great company, and I like the fact that it's discounted, and I think it was overvalued not long ago. So there you go. The next one we're looking at today is Adobe. But before we look at Adobe, I just wanted to check a couple of things. So a year to date for this company, as you can see, is about basically down about almost 10.5%. For the last 6 months, it's only up about 11%. But then it's down almost 17% just this month. So they must have reported earnings and maybe they missed it, some of things. So that's why I came here just to have a quick look. But they haven't actually. Okay, that's interesting. So they beat top line, bottom line. Maybe they guided lower and maybe they lost quite a bit. In terms of earnings expectations, we've already seen some of it. So 6%, 13%, 15%, 27% after that. But remember, that's only one person's opinion. So just focus maybe on the first two. And in terms of revenue growth, about 10% every single year moving forward. So nothing huge to worry about. Adobe, we all know Adobe, 214 billion market cap. It has wide economic moat. Right now it's trading $477 per share. Of course, they don't pay any dividends yet. I wouldn't be surprised if they start paying dividends soon, because right now we've got Meta, we've got Google, we've got Microsoft, and Apple has already been paying. So they might start following these companies, because they do have they've been around for quite some time and they do have a free cash flow, so they might start doing that very soon. You will see, we will see. But 5-year revenue compounded annual growth rate of 17%, and when it comes to EPS, we're looking at about 22%. Profit margin 24%, return on equity of 32%, and return on invested capital of 36%. $6.4 billion of free cash flow right now. Total return in the last 10 years 23%. Growth estimate for next year 13%, 12% after that. 22% discounted right now. $610 per share is where they think the price should be. Right now it's 477, which is quite nice. With Adobe, just be mindful, because it's with regards to AI and everything else, people are saying, with everything that OpenAI is doing right now, could potentially hit this company's revenue in the long run. So they kind of need to innovate, if you like, in the next couple of years to keep up with all the AI situations that's happening. But as you can see, a year to today is down about 20%. And I've not seen this company trade about forward PE of about 26 for quite some time. So let's look at the earnings expectations moving forward. So about 12%, 13%, 15% there, and again another 10%, 11% every single year moving forward. So nothing huge to worry about at all. Next one is the one I own in my portfolio, and that's Medtronic. This is one of the companies that basically does a lot of the healthcare equipment. So $106 per 106 billion market cap. It has narrow economic moat, almost $80 per share. In terms of dividend, 3.5. I think that's the highest it's been for quite some time. No, actually it's gone higher, I think, not long ago. Let me just double check, because the price at one point was way lower than that. So yes, it was higher. Basically has come down a little bit, as you can see on that little graph. I don't know if you can see that, but you can see it a little bit there. So yeah, 50 payout ratio, we're looking at about 52%. Latest increase was 2%, 5-year growth rate of 8%. And they have increased that dividend for 45 years. So this means another 5 years, this company will become a dividend king. Annual payout, we're looking at $2.76. Safety, $99 per share. 99%. And the 5-year revenue growth and basic growth side of it is 1%. The EPS is about 11%. Profit margin 13%. Return on equity 8%. Return on invested capital 8%. Almost $5 billion of free cash flow right now. Total return in the last 10 years about 6%. Growth estimate next year for 5%. 3% after that. 27% discount right now. $112 per share is where they think the price should be. And looking at the growth side of it moving forward, so this year is almost basically flat, like maybe 2% down. Then after that, it's about 5%, 7%, 8%, 8%. And again, if we're just looking at this, there's quite a few people looking at this company. Then about 3%, 4%. So they do, one of those steady eddy companies, they do grow their revenue about 4%, 5% every single year. So nothing huge to worry about on that side as well. Finally, Zoetis, this is one of the animal healthcare company. We have not talked about this company in detail, so if you would like me to look at maybe just one single video dedicated to this, please let me know. Right now, it has a market cap of $72.4 billion. It has a wide economic $158 per share. Dividend 1.1. I didn't even think they pay dividend, but they do. Payout ratio very, very low, 28%. Latest increase was 15%, and the 5-year growth rate 24%. Dividend streak, 10 years of paying that dividend, which is really good. Annual payout right now, you get $1.73 cents, and the annual payout, safety 74%, 5-year growth rate of 8%, 5 in terms of the revenue side of it, and then 5 in terms of EPS, we're looking about 15%, profit margin 27%, return on equity almost 50%, and return on invested capital 26%, which is quite nice to see. And $1.6 billion of free cash flow right now, 19% total return in the last 10 years. Growth estimate next year is 11%. Growth estimate after that for every single year is about 10%. Then 12% discounted, $170 per share is where they think the price should be. Now looking at the moving forward in terms of their earnings, about 9%, 11%, 10%, 12%, and so on, and then about 7% every single year after that. So that's the 5 companies I wanted to share with you guys today. I want to show you from a Sharia compliance side of it. Nothing huge really to worry about. Every single one of these companies from business is fine. From interest-bearing debt is absolutely fine. Medtronic is the only one slightly higher. And then interest-bearing securities is absolutely fine as well. Now, if you're interested in any of these companies, please do always your own research and so on. And let me know if you have any questions, inshallah, or any companies you want me to look at. Just put it in the comment section. If you have not joined us on the Patreon account, please do so. It really genuinely helps the channel. If you haven't liked the video yet, what are you doing? Come on, do that and subscribe to the channel as well while you're at it. Thank you so much. I appreciate that. Thank you. Have a wonderful day. Assalamu Alaikum.